this is why I'm so fond of the term logarithmic decay. Little by little by little by little, but bang, all at once. We're right. The little by little by little by little is happening all around us. Metal accumulation, lack of bond purchases, moving away from the dollar, building an infrastructure that encompasses the majority of human population. All of these things are happening. These people, whether you're talking the BRICS and the central banks associated, or the people here in the US who are draining the exchanges and standing for delivery, are the most well-informed and well-funded people in the world. And they know what's coming. Do as they do, not as the media, who is misdirecting the public headlong into equities right now when the big money's going the other way. Don't do what they say, do what the big money is doing quietly.
As China observes the West's decline and the global South's rise, BRICS has become Beijing's strategic bridge to harness and potentially shape non-Western countries' transformative power to reform the international order. Central banks globally have been rebalancing their reserve portfolios. The US dollar's share in global foreign exchange reserves has fallen from more than 70% in 2000 to below 60% in 2025. At the same time, central banks have ramped up their purchases of gold, signaling a deliberate move toward hard assets and away from dollar-denominated holdings. Reputable gold bullion dealer Andy Schectman emphasizes a global shift away from the US dollar, with trade realignment accelerating. Schectman sees central banks' gold moves as part of a long-term plan to exit Western control. He warns the shift could speed up suddenly and urges investing in gold and silver like major players are doing. According to the World Gold Council, many central banks worldwide are considering adding gold to their reserves in the coming years. This trend is generally said to reflect a broader shift away from the US dollar as the world's primary reserve currency. Regarding de-dollarization, Schectman underscores how initiatives like Belt and Road and the Chiang Mai Initiative are deepening cooperation. He points to China's M-Bridge system, now settling CBDC trades in 7 seconds across 16 nations with 98% lower fees than SWIFT. China's robust demand for gold has contributed to significant price movements in the gold market. The increased demand from central banks, including China, has bolstered gold's resilience at a time when the US dollar index is near a 6-month high and US 10-year bond yields are at 16-year highs above 4.35%. Ultimately, Schectman reveals the Shanghai Metals Exchange is expanding globally to enable yuan and gold settlement, bypassing the dollar. He cites Lavrov's confirmation that the bridge system excludes dollars, euros, and pounds, signaling a deliberate shift toward a dollar-free trade bloc. Before we dive into Andy Schectman's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
And the more I dug into it, I started seeing groups like the Shanghai Cooperation Organization and the Eurasian Economic Union. These are countries that are largely either in BRICS or closely tied to BRICS because of their affiliation. The president of Belarus said those two organizations, the SCO and the Eurasian Economic Union, need to join BRICS anyway. A lot of them are already in it, Iran, Russia, China. But these countries are all, you put them all together, you're talking 90% of human population. So I want you to keep all that in mind as I mention something. And this is the important part, right? So it's not just BRICS. You got the Belt Road, 75% of human population, the Shanghai Cooperation, and the Eurasian Economic Union. They are 90% of the world's population. They're 3 of the 4 largest nuclear arsenals. They're the majority of resource production in commodities, every form of commodity from base metals to rare earths. They have the engine of manufacturing with China and the other countries in Southeast Asia. So keep all of this in mind. So, we've seen recently something called the Chiang Mai Initiative, which is a strategic regional unity kind of thing where countries that used to be adversaries like China, Japan, South Korea have jointly committed to reducing dollar dependence. Okay, all of this stuff is happening. They've come out and actually said that. But then you get about 3-4 weeks ago, the People's Bank of China came out and made an announcement. They said, we've connected the digital RMB cross-border settlement system to 10 Asian and 6 Middle Eastern nations. Those Asian countries are those in Southeast Asia. And that represents right now 38% of global trade. This is the digital RMB cross-border settlement system. It's M-Bridge. They just gave it a different name. Now, this settlement system takes 7 seconds to clear, whereas SWIFT takes 3 to 5 days. So this is the M-bridge where you trade your central bank digital currencies cross-border with one another. And in 7 seconds, it settles with a 98% reduction in fees and versus 3 to 5 days with SWIFT. So all of that stuff is great. So what am I getting at? What's so new about this? We've known about M-bridge, right? Yes, we have. So now you have the Belt Road, we have the Shanghai Cooperation, we have the Eurasian Economic Union, and we just found out that 38% of global trade has now been connected to the RMB cross-border settlement system, right? And the idea is to trade central bank digital currencies and settle in gold. Now, here come the two pieces that aren't being talked about enough. Vince Lancy is talking about some of it. And what Vince Lancy is talking about is a new system that the Shanghai Metals Exchange has talked about, where they are now going to allow global physical delivery through international storage hubs, allowing settlement in yuan by bypassing the dollar altogether. And they're building new storage facilities as an arm of the Shanghai Metals Exchange, starting with Saudi Arabia and Hong Kong. They will move to Africa and South America. They're going to build Shanghai metal exchanges in these jurisdictions that will allow to trade across the bridge technology and settle in gold. Any imbalances? Well, am I guessing about that? No, I'm not. Why? The big piece of all of this is what Sergei Lavrov just came out and said. And he said, this new bridge technology, we are opening up to non-BRICS members. But he also came out and said, the technology is not compatible with dollars, euros, or pounds. So they're going to open it up to non-BRICS members, but it's not compatible with dollars, euros, or pounds. Well, who does that leave? That leaves the Belt Road, all of the countries that are in the Belt Road. That leaves all of the countries in Asia. That leaves all the countries in Africa, in South America, all of these currencies, all of these countries that are now aligned very closely with the BRICS, but not part of it, will now be allowed to trade over the bridge technology, which will be free from SWIFT interference, will settle in 7 seconds, a 98% reduction in fees, and will settle imbalances in gold. Now, does it make sense, if you think about it, why all the central banks have been accumulating gold and bringing it home from the Bank of England and the New York Fed? They don't want it there anymore. This is the long game that they are playing. And so I would say to you this: we are very close, very close. This is the primary objective of the new meeting in July in Brazil, to further develop this new settlement system. It is not a unified currency, it is a BRICS settlement system. And they're trying to settle in something other than the dollars. Now, the reserve status of the treasury of the US dollar is being usurped by things like gold and silver and platinum, which have outperformed the treasury. Look at gold. Silver up 40% versus the 4% you get in the treasury. Gold was up 40% last year versus the 4% you get in the treasury without the counterparty risk, the sanction risk, etc. What I'm getting at, these countries are playing the long game. They're building the infrastructure. You're talking the majority of human population that are aligned with the BRICS but aren't in it. Everyone said the BRICS isn't big enough. Okay, well, how about a settlement system that's aligned with everyone who's kind of aligned with the BRICS? This gives them all incentive. And when it trades free from SWIFT interference, the West will have no idea how much of that trade they're not getting, because it's now trading over the bridge technology. So what I want to say to you is this, is that this is why I'm so fond of the term logarithmic decay. Little by little by little by little, but bang, all at once. We're right. The little by little by little by little is happening all around us. Metal accumulation, lack of bond purchases, moving away from the dollar, building an infrastructure that encompasses the majority of human population. All of these things are happening. And if you look all around, you see them, but you need to put them together into a greater context. And what I'm simply saying to you, the genius part of what Lavrov said is that you now give incentive to 9 out of 10 people in this world in terms of human population, the majority of global GDP, 3 of the 4 largest nuclear arsenals, all of the commodity production and manufacture, all of this stuff is now coming together. Now, it's not going to happen tomorrow, but you can see, if you look closely enough, There are countries like China and like Saudi Arabia that are straddling, playing both sides until it's set up, until everything is ready to go. And it'll be very difficult for the US or the West to challenge. But when you realize this technology does not compute or is not compatible with dollars, pounds, and euros, what more do you need to know about the way that much of the world is moving? So either you are a dollar bull forever and believe that things can never change, or you are a little more pragmatic and say, look, if there's a 10 or 20% chance of this happening, perhaps I ought to reallocate 10 or 20% of my funds into something like hard assets in my own possession, the way that these people do. Because I will say one thing, these people, whether you're talking the BRICS and the central banks associated or the people here in the US who are draining the exchanges and standing for delivery, are the most well-informed and well-funded people in the world. And they know what's coming. Do as they do, not as the media who is misdirecting the public headlong into equities right now when the big money's going the other way. Don't do what they say, do what the big money is doing quietly.
Seasoned investor Andy Schectman emphasizes that record gold and silver deliveries into COMEX signal powerful players shifting to physical assets. He highlights that this is unprecedented. Contracts once settled in cash are now increasingly settled in metal, with May seeing the largest gold and silver deliveries in history. Gold made incremental gains on Monday as US-China trade negotiations are underway, snapping previous two-session losing streak. Front-month COMEX gold for June delivery climbed $9.4 or 0.3% to $3,332.10 per troy ounce today. The delivery demand at the COMEX is unprecedented. As stated many times before, this is where the big moves in gold and silver will come first, and those moves have already happened. The price of gold has reflected this as it has stayed well north of $3,000. The data points to a continued move higher. In the long run, Schectman views this as part of a broader global trend to de-dollarize and prepare for a new monetary system, possibly involving gold-backed assets. Let's get back to the interview.
Any discussion about gold and silver without talking about the BRICS now is a mistake. And a lot of people would say, well, the BRICS is old news. I want to get to that later on because I think that there are some developments, Danny, that have happened within the BRICS framework that I haven't heard anyone talking about but me, about one thing that changes everything. I want to come back to that. I think the thing that I've been focusing on the most, really all year, has been the amount of gold that's been coming in to the United States. Now, we know that countries like China have been buying gold. In fact, they expanded their gold reserves for the 7th straight month in May. But that's happening all around the world. And that's something that should certainly not be ignored. But what's happening here in the United States, and when I mention gold, I mean silver too, which, by the way, is up over 45% year to date, which is outpacing everything in the metals complex. But when we talk about gold, to see the amount of deliveries coming into COMEX, and really no one knows who is behind it, is something that I think needs to be really contemplated in the respect that, as an example, the May gold contract and silver contract, the May gold and silver contract were the largest deliveries into the COMEX market in history. And this is just kind of a repeat, if you will, of everything that we've seen since really November, where month over month over month over month, we continue to see huge inflows into the COMEX market. Now, this is ridiculously different than anything that I've ever seen in this industry, ever. This never happened before in this industry. As a result of futures contracts normally settling for cash, now all of a sudden you're seeing these futures contracts settle in for delivery. And that's something that, 8.5 billion, if I'm not mistaken, in gold was delivered into the May contract. Now these are things that, forever you would see maybe 1% of contracts stand for delivery. Not the sheer amount that we've been seeing, which is off the charts, and it's continuing. We've had somewhere north of 35 tons of gold. And I think what we're really seeing is that private wealth is moving towards assets like gold and silver with no counterparty risk, and that's why they are standing for delivery. To me, that's the biggest thing, Danny, is that we're seeing a global rush, whether it be bleeding dry, the LBMA, to where they have to go to 8-week delivery delay from T+1, T being the trade day plus one settlement, the third day your metal should be moving, to T plus 8 weeks. A draining of the Shanghai exchange, where Chinese are promoting their citizens and prodding and encouraging them to accumulate gold and silver through state-sponsored gold and silver projects. So they are actually pulling it out of the Shanghai exchange, or the same thing happening on COMEX at a much bigger level, where the biggest money in the world, the most sophisticated money in the world, the most well-informed money in the world is standing for delivery. Now you can look at what President Trump said on Easter Sunday, a tweet on Truth Social and on Twitter, where he says, you know, the golden art of negotiating, he who has the gold makes the rules. Thank you, whatever that means. You can point to Treasury Secretary Bessent, who said, look, you know, there'll be a new Bretton Woods, a new monetary system within this administration. And of course, you can point to Judy Shelton, who on my interview said that she was told by Trump, and many people think she'll take over to run the Federal Reserve when Powell's tenure is up in the next few months, that she was told by Trump that he would issue gold-backed treasuries, 50-year duration to begin with, on July 4th, 2026, which would be the 250th year anniversary of the country. But, you know, look, it's not just gold. We've seen somewhere in the neighborhood of 12,000 silver contracts stand for delivery just recently. And so we're talking, and you multiply those by 5,000 ounces. So I guess to me, the thing that really sticks out, Danny, more than anything, is delivery into the ecosystem. And the people who are doing this are not just the most well-informed, they're the most or the well-funded, they're the most well-informed. And people at these levels do not do this kind of stuff, do not spend this kind of money, where in March it was almost $5 billion, $4.5 billion for a client from JP Morgan. In May, the largest deliveries ever. This has been going on since November. Who's bringing all this in? Who's standing for delivery? And what do they know that we don't? Now, of course, the price keeps moving higher. You find that these players make these moves prior to the price moving, using the suppression of the COMEX market and the LBMA to their advantage. And there are those that think, like Eric Young, the King Kong on X, who believes the Chinese are doing the same thing with silver, shorting the paper price in New York and buying physical in non-price setting locations around the world to accumulate it at subsidized prices. They're playing the game, a long game, to drain the shelves. And I guess what I would say is that when players at that level stand for delivery to the degree that they have, there's something much bigger at foot than any analyzing would ever tell you. It's just simply these people don't make these kind of moves in a preemptive fashion without knowing what's coming or having a very good idea of where things ultimately go. And here we are looking at silver, where today,
so like 36.75, I believe.
Yep, man, you got it. The futures are up $1, up 2.81%. So we're talking something's going on. And silver is now, this is the third time in history it's been this high, which is kind of crazy if you think about it. And when we get through this resistance in the mid 40 range, there's nothing standing in front of it. And I guess Vince Lancy made a great point, and he said, silver is where gold was, 18 months ago or however long ago before it started to make its move. And on a technical level, this long building, 45-year cup and handle base building, it's right at the mouth of the cup, about ready to break through, and it's right, breaking through that resistance as we speak. So, yeah, I think it's the action in the metals market that to me, along with deliveries, that is something that I pay real close attention to. This stuff doesn't happen just for the hell of it.
The potential impact of a new BRICS currency on the US dollar remains uncertain, with experts debating its potential to challenge the dollar's dominance. While the BRICS nations are making concerted efforts to reduce their reliance on the US dollar through various initiatives, significant obstacles remain. Is the prospect for BRICS going to change dramatically, or is the gold price rise reflecting something else? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.